Have you ever wondered how the triple and quadruple witching impacts markets? You may be thinking, well, what is the triple and quadruple witching effect? Well, in this video, I'm going to outline to you what it is, and most importantly, how it impacts markets and which markets to look out for. In particular, the S&P 500, the NASDAQ, as well as single stock options show particular characteristics around this market phenomena. So, what is triple and quadruple witching? Now, this refers to days when multiple derivative contracts expire simultaneously. Specifically, triple witching is when you get stock options, stock index futures, and stock index options all expiring on the same day. Quadruple witching is exactly the same as triple witching, but it also includes single stock futures. Now, these expiries happen on the third Friday of March, June, September, and December. Okay, so the next triple witching time is September, Friday the 19th, and December, Friday the 19th. They're the next two triple witching, which also happen to be quadruple witching events. Okay, so that's what it is. But why does it matter? It's because all of this contract unwinding, rolling over, and hedging creates a big surge in volume and volatility, and sometimes very unusual volatile price movements. Especially, it's noted in the last hour of trading, sometimes called the witching hour, right? Now, how does the market react historically? This is where Season X comes in, right? We've analysed how key indices behave around triple and quadruple witching dates, and there are consistent patterns. If you look at the S&P 500 here, we can just search on events, and looking at events, we can look at the futures expiry. Here we've got the triple witching around the S&P 500. This is how the S&P 500 is affected. And now what we often see is a dip just a few days before the expiry options. And you can see here the bias is to the downside, and there can be some really big moves to the downside. That also coincides with a big move we had in Tesla around a triple witching period of 2020. And you can see there was a big move here around that triple witching period in 2020 in the S&P 500. So what you then also see is again the other side of the triple witching effect. So the 2 days afterwards, you tend to see upside, a median return of 0.19%. Now, that's how the S&P 500 acts around triple witching. But look at the NASDAQ. The NASDAQ has an even more pronounced reaction. The NASDAQ is more volatile than the S&P 500, moves are much faster, quicker, and very volatile markets, the NASDAQ. And you can see here, look at the drop. Significant falls. And a median return of minus 0.21% 2 days into the triple witching event, and then out of the triple witching event, look, 0.69% median return. An average return of over 0.5%. So pretty significant. And even the DAX shows some short-term distortions around the triple witching period. You can see here, just in the day before and the day after, there is an average return of minus 0.49%. So while witching doesn't always move the market in the same way, there are these statistically significant tendencies which traders can prepare for, particularly intraday traders trading the NASDAQ. You should definitely be looking at this triple witching effect. It could really give you some upside. Also, any future E-mini traders should also be looking at this for the S&P 500. Now, what about any single stocks? Are any single stocks disproportionately affected? Now, the sort of stocks that are going to be impacted are ones that have the highest option volume. So the big name stocks that dominate daily and open interest options are big stocks that you hear like Tesla, Nvidia, Apple, AMD, Amazon, Meta, right? These are the big names of stocks, just like the S&P 500, the E-mini, the SPY ETF, and the Triple Q, the NASDAQ ETF. These are the ones that really tend to see outsized swings. And Tesla, for instance, had a very big move back in 2020. We had a big single stock move for Apple in 2022. And you can see that these moves can be really quite significant in the stock. And definitely you want to be looking at these big name stocks around this triple witching period. So if you'd like to go deeper with this, why don't you come along to Seasonax? You can sign up here and you get access to literally thousands of seasonal insights that are just waiting to be revealed. You will get, with a simple subscription, access to some of the most popular instruments, and you can start to see these strong seasonal patterns. And around this triple witching period, how should you trade? Well, you should be looking for technical setups that coincide with the seasonal tendencies. So for instance, say you're on the NASDAQ and you can notice you're just coming out of the triple witching. It's the next couple of days after the triple witching, Monday, Tuesday, following week. Then you might be looking for disproportionate upside. So you might be looking for buying on dips. And if there's an opportunity to buy on dip, then that could give you an extra level of confidence. Perhaps you're coming into triple witching. It's the triple witching day. You may be conscious that longs may be inappropriate, and it may be an opportunity to look for shorts. If there's a shorts trade set up, you just got a little bit more confidence. So if you want to stay ahead of the market around these volatile expiry periods, use Seasonax to uncover high probability patterns around these triple and quadruple witching times, and it'll help you trade with more confidence. You can search by index, sector, or individual stock, and you can see how these expiry option prices really do impact price.